morning, everybody. It's Tuesday, January 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments for us or would like to chime in on anything we're discussing, please drop us a line in the chat area, and we'll be sure to get to that during the show. Real quickly here, overnight markets had March corn down 1.5 pennies at 445.5. March soybeans up 11 at 1235 1/4, and March Chicago wheat was up 3/4 at 596 3/4. This morning, we had an export sales announcement of 126,700 corn to Mexico, and that was for the 23-24 marketing year. Gentlemen, cold morning. It's freezing outside. Trucks at 8 below coming in. We'll get some, I would say, some ancillary thoughts on the report from Friday. I know there was a lot to take in and digest as it's a pretty big report. I want to start with Ben here this morning. We were talking a little bit of chart action in the March contract specifically, and I know you had a couple of points to make there. So good morning, Ben.
Morning, Dan. Good morning, everyone. Just looking at really long-term stuff, the lows on the report day coincided with some pretty big numbers that date back from the 2015 to 2020 period. Those were some old highs. If you look at corn, we traded 440 twice in that time frame, with 19 being a blurb up to 473. We kind of hung around 473 for a while as things trade out. It's become areas where markets taking control. There tends to be a fair amount of auction with buyers and sellers looking to take control of the market. So hitting 441 on the report day on Friday certainly does not tell us anything other than that shorts were willing to step in and cover there, as they were really long-term sort of levels that we haven't spent a lot of time at. I think that we'll potentially probe there again and see who wants to stay in this market, much like we did at the 470 level. And the 470 level is a little bit different. When we were up there the first time down, it did coincide with when we had crop insurance in place, and there was a kind of a synthetic floor for a lot of producers based on APH. Looking at beans, kind of a similar. We hit some long-term support levels based off of old highs, and I think everyone is fairly familiar with that. Old highs kind of become the new support, or new lows. Old lows become the new resistance. And in this case, when we've gone through repricing events, we have revisited those as you go back to really long-term charts. That it doesn't mean that it's going to reverse the trend, but I think Friday was indicative of some people willing to take a little bit off the table. If you go back to beans, in 2016, we had a high there of roughly 1207, 1208, and then you go back to November 2020, we had highs at right around $12. So there's a lot of grain, beans, and corn at those levels changed hands going back in the last few years. So just kind of keeping an eye on that to see how the market reacts to it. We've talked extensively about what is the impact of inflation on grains, and I think that we're trying to figure that out. And unfortunately, lately it's been lower due to large crops and lack of demand in beans. Corn demand has been okay, but I think we need to see China step in and be a buyer of our corn in order to really give us any sort of solid support underneath the market. So for now, after that report, we've defined supply, and I think that the short story has been played very well by the bears, and we saw a big increase in fund shorts in both corn and soybeans reported on Friday. So really just big levels that are worth watching to see how we react off of them. And again, that doesn't do anything to necessarily help us in the next week or 2 weeks or 3 weeks, but they are levels that I think should prove to be important, either above or below, as we auction off here in the next 2-3 weeks.
Those are a lot of good points, and you do mention the fact it looks like last week funds sold about 36,000 corn, bringing them short around 237,000, which would be their largest short position since June of 2020. 20. Dustin, thoughts on the continuation of them building a short position here?
Yeah, pretty big build in both corn shorts and bean shorts, and then a big drop in the meal as well. So they they reduced their net long position quite substantially, and as of last Tuesday, the 9th. So meal and beans continue to be sold off. Oil, soybean oil, they didn't extend that liquidation. So they're quite short corn, and I think that makes a lot of sense. I think they're just starting to build a short on beans, and like the question becomes like, how big does that get? Over the last 6 weeks, it's been a very crazy move from the length that they had in beans through the products and through beans themselves down to where they are now. So it's been a pretty dramatic move, and I think that explains a lot of the price action. A lot of this move was fund selling. If we just take stock, though, we go into the report. We're actually technically higher as of right now than where we were going into the report on March beans. So that's one thing to note. I think the report, the biggest thing that we always look for in the Jan reports is that we're looking for stocks, and every other number out of that report is basically backed out of stocks. So yes, we raised yield. But we also lowered acres substantially below what people were expecting for both corn and beans. And we ended up having a little bit more stocks than we were expecting, maybe 24, 25 million bushels. But we're still actually tighter in the U.S. soybean stocks than we were at this time last year. So that's another thing to kind of think about. When we were $15 beans last year, that price didn't reflect, obviously, that South America was having a good crop. We had a much bigger drawdown in Argentina last year than we're having in Brazil this year. So if we do still crank out, if South America still cranks out 155 million out of Brazil, as CONAB's suggesting, that's reflective of why bean prices are down, no question. But funds are obviously kind of driving this. They're driving a lot of the move here. And the question is, do they want to get short beans with this type of a setup? And I know a lot of it is just simply, price action and moving targets, not necessarily fundamental, projection. But, the situation is still there for tightness if for some reason, we keep getting surprised out of South America. So what does that mean? Does that mean we go out and buy beans? I'm not suggesting that. I am suggesting, though, like the ratio move makes sense. So we just had a big jump in beans divided by corn on a ratio. So the new crop ratio is back up to 2.52 to 1. Old crop ratios jumped quite substantially as well. But 2.52 to 1, that's not indicative of high corn on corn acres. So you see a lot of people, guessing 92 million corn acres this year coming out of 95 million acres, 94.5 million last year. I think there is a question there of, how are we going to get there with these 24 corn so downbeaten there. We would suggest maybe a more even split of acres, closer to 89 million of both corn and beans in this low margin environment. So that's one thing I think the market's going to have to contend with here is, yes, we raised stocks on corn another 120 million bushels than we were expecting. But we are also putting we're disenfranchising corn on corn acres right now and putting a huge incentive to go back to beans on corn, which could be a pretty weird setup as we go into the spring time frame of what corn needs to do to garner those acres.
Yeah, and the it's still a big question too. We have started to see some relief on some of the input side, in terms of what it costs to produce. I know interest is still a big factor, and you've touched on it a number of times on land rents. Land rents are still inflated in a lot of areas, through the Corn Belt. So that's going to be a really interesting push and pull, between corn and beans as we head in, because you also, by all estimations, you recharged a lot of ground on this crazy systems that have rolled through, and still looks like we're scheduled to get a couple as we progress through the end of January. So I know that was a big deal too, seeing improvement in drought monitor.
Yeah, I think, when it comes to corn and beef, a lot of times we get the question from growers like, but do people really pay, put that much stock into switching up rotation because of price. And obviously, last year we had a huge incentive, $5.91 spring corn price, and that's what led to all those acres, right? All those corn and corn acres last year.
Sure.
So natural rotation, goes back towards a little bit heavier beans or more even split between the two of them without price incentive this year, in our opinion. When you're negative margin, we're seeing this from university data. FarmDoc just put out new numbers last week. At their projection of a $4.50 cash corn price, and I think it was $11 cash bean price. Beans on corn was a lot lower of a loss than corn on corn was. Right? They had a huge projection of incentive to plant beans, and interest goes into that for sure. Just lower cost crop in a negative margin. So that's a lot where our thought process goes, is like, yes, quarterly stocks, maybe that suggests that we need more bean acres and less corn acres, and that's why the market's having a ratio move. But I don't know that it's changed that dramatically when we're talking about only another 120 million bushels of quarterly stocks and only 24 more million bushels of quarterly stocks for beans. That falls within the margin of error of your typical quarterly stocks report. So I'm not predicting this, but you get to the March and June stocks reports, things might change again, right? We can have 200 million bushel swings in each of these reports, and that just changes the perception of tightness quite a bit. I don't think corn's going to get there because we're talking a 2.3 billion bushel carryout for corn pretty easily. But for beans, we're sub 300 million bushels still, and we're counting on South America to undercut us for the length of our competition window, which, so far they are doing, but we still have had record crush in this country until now. So I still think there's a bit of an up in the air question as we get through the next couple of quarterly stocks reports for beans.
Yeah. And it's a good point too. We're going to have a crush report out here today, 11 o'clock. As we've talked about, you should continue to see that be a pretty large number, with everything that's coming online and our crushing program over here. Real quick here, over the weekend, got to send a shout out to all of our livestock producers for putting up with these storms, man. Got a lot of respect for you guys out there. Ryland, weights have got to be struggling, man.
Yeah,
it's cold, it's snowy.
Yeah, well, and we'll see that data from when the storm really started to hit this Thursday. What at least the compilation is released by the USDA. But yeah, I mean, like, it's kind of insult to injury. You got a lower cash price this week as well, which is kind of interesting, but it just seems like you've got some transportation issues, some production issues. You've had some plants cutting some shifts here. So, the expectation at least was that slaughter was going to be, or at least production was going to be down. So, last week it was already starting to show signs of that, 465 million pounds versus 466 the week before. So we know that these are, these issues are kind of in the market right now. It feels like usually this would kind of catch people off guard, but right now it seems like the managed money just doesn't want to back it up right now. If anything, just the CFTC commitment of traders data showed that these managed funds at least were only net long 13,770 contracts, and shaved that down by 3,600 contracts from the week before. So, we're still seeing a real lack, or at least cautious interest in this market from the managed money. It may be a little bit different in feeders because they're already carrying a short position in feeders, net short 2,200 contracts. And it really does kind of feel like they're pressing that short side, especially with grain prices falling. But futures prices have been kind of creeping higher here in both places. I mean, you've got a little bit of a positive intermediate trend here with feeders closing over the 50-day moving average, while the live side, February cattle, they're definitely struggling with it a little bit. They've tested it twice, really failed to close above. So we just really haven't changed that mindset yet. And it certainly could. This is obviously one of the smallest long positions they've had in a long time. And they're kind of a natural long in the market. They like to follow the packer. And at least for us from an investment side, would rather be long than short. You can just see this from the historical data. So there's this expectation that once this report comes out on the 31st, that the funds are just going to buy everything that they can. That's you got to be cautious with that kind of sentiment, just because we need to see what that data says and not just promise everybody that the funds are coming back, which I think a lot of times people do. So still want to be cautious about the data. Obviously, the market's very cautiously optimism, but we kind of got to get past some of these production hiccups and past this report, I think, to really solidify that.
That's very good, Rylan. I appreciate that. Just came into the open here, guys. Real quick, I'll give a rundown. March corn down 444.5. March soybeans up 6.5 at 1230.5, and March Chicago wheat's down 3.5 at 592.5. Sleepy Dog's got a question for us here this morning. I think I kind of know what direction we're going to go with it, but I'll read it real quick here. So, regarding unsold 23 crop corn crop that's in the bin, do you have a strategy recommendation for pricing those bushels? Before somebody jumps in, I think, as always, AgYield's, our way of handling working with growers on a consulting basis is always to be customized, right? In terms of understanding your operation specifically. So as far as a blanket, that's going to be tough in this platform. I think, speaking for the guys here this morning, Sleepy Dog, if you got our email is info@agyield.com. And if you reach out, I can connect you with one of the consultants and maybe we can visit with you just about your situation particularly. And I know that there are some things that we are doing for folks to catch up on old crop corn. We're getting new clients every day that, are sharing. Like I said, reach out, info@agyield.com. That way we can visit with you there and, try to see if we can't set something up there.
Yeah.
Fellas,
and I also add to that too. We also have to be very careful in this forum not to give recommendations, right? So I don't want to dodge that question at all, but that's also part of what we're allowed and not allowed to do in this. And it's really got to be, under our disclosure documents and things like that is why we specifically don't get into those types of things on this forum. But we do have opinions on what we can do for old crop right now for anyone that's customer wants to call in.
It's great point. So Sleepy Dog, reach out to us or give us a call. Numbers right there across the screen. So would love to visit with you and see if there's something there for you. So anyway, like I said, market's open here. Corn's down a couple, beans up 6, and wheat's off 4. One announcement here, just to keep on your calendar, January 29th at 2 p.m. Central Time. We are going to host our first premium content show. We're going to have John Wenzel from StoneX, who's the director of energy and fuel, discussing trends and the outlook as we go into the end of the winter and into the spring. So mark that down on your calendar. More details will be out as we approach that date. And as always, we are streaming live every day on X, Facebook Live, and YouTube Live. We appreciate everybody's questions and comments. Thanks to the guys. Good discussion here this morning. We'll be back with you tomorrow morning, 8:15 Central Standard Time. And we hope everybody has a great day. Thanks.
Thanks.